Hey guys, welcome back to another video. I hope you guys are having a great day. The trading session closed on Friday for natural gas was quite interesting as the bulls did decide to make their way back into the market. Now, Asia spot prices maintain a downtrend on the tepid demand, which is pretty much low demand. And on the other end, mild weather and strong output leaves natural gas futures price in a limbo. This is just very interesting in terms of what direction we're heading. But before we get into that, if you guys are here for the first time, you do want to stay up to date with everything to do with natural gas, scroll down, tap the red subscribe button. While you're there, slap a like on the video so the YouTube algorithm can push the video out to more people can stay up to date with the natural gas info. Now, the reason this is really interesting is Asian spot liquefied natural gas this week hits its lowest since early July of 2021 as weak demand and solid inventories in the northern East Asia continue to pressure the prices while Europe prepared to exit the winter with record inventories. So pretty much you guys know for a fact right now we are in a strong downtrend because the inventories have not been used up, and at the same time they are at a record high. Now, the inventories will be the massive factor affecting the amount of purchase that EU will do in the next winter season. And if the inventories do not go down, then obviously the purchases will be less, the demand will be lower, and also the supply will stay the same, therefore the price will go down even more. If we see further declines, we could see provisional gas companies starting to bite again. Now, also another thing that can happen is if the price go down even more, then all the countries would want to buy it at a cheap price, and that would cause the price to maintain a small consolidation zone as well. But what will that consolidation zone be? I'm personally thinking it cannot fall below 1.8 market because that has been previously been a very strong support zone, as we have barely fallen below that only like 3 years in like last 30 years. Another thing which is really interesting is you guys need to understand November, February, March, worst months of any year when it comes to how well natural gas price is doing. Now, November, because every single country is about to get into their winter, so the amount of supply is super high in their inventory, so they do not need to buy anymore. Therefore, the price is going to drop because the demand will drop. Now, February and March, those are going to be the months where the countries are just recovering from the winter before they go back into filling up their inventories. But this year that did not work out well because the inventories were pretty much full as the winter was not as strong as expected. Another thing which is really interesting is May contract moves to front, leaving natural gas futures to be dropped by 0.24%. EIA reports lower than expected natural gas for the week ended March 24th. Despite lower than expected draw in the latest report, natural gas inventories remain comfortable. Now, if we look at the price, as you guys can see, that about 6 hours ago, a lot of buy orders decided to come in around the same zone. Why did that happen? So we're just getting out of March and everyone thinks that a lot of countries will start filling up their inventories. But as I mentioned, the inventories are quite heavily already full, which is quite scary. And then a lot of, let's just say, short traders decided to short their position around this zone, which was close to 2.22, and then we did see a slight pullback. What will happen on Monday? I personally think we will open around the same zone and we might see a little bit of consolidation zone before we are able to make the decision what direction to take. The reason this was a little good is because you guys can see after we did flip it into an uptrend, the downtrend actually did follow very, very closely, as the super trend was flipped into a downtrend in less than about 48 hours, which is quite crazy. And at the same time, the RSI line was in a very high point, so the slight pullback that we did get was expected. That's probably the best word to use it. Another thing is Freeport LNG Texas export plant back at full power, data shows. What does this mean? We're going to be getting a lot more supply from Texas. So company Freeport LNG export plant in Texas was on track to pull in as much natural gas from pipelines as facilities can process in LNG. A sure sign that it is back at full power, and let's just say demand for US LNG increased after several countries slowed purchases with Russia, so they're trying to pump it up even more. But you need to understand, once the war comes to an end, if Russia starts supplying and all the countries start buying, the amount of natural gas to pick from will be significant, but the demand will be much lower. Now, talking about Greymouth, which is an area inside of New Zealand, Greymouth gas guaranteed offshore oil and gas exploration permit. Now, New Zealand does not allow this quite significantly by a lot of areas, and also it is just very nature-based country. But seeing that they are allowing this for one specific reason, which is, you know, just allowing more exploration, is great to see. Initially they declined it in March of 2018, but now they have allowed this just to have more exploration and more options around the country. Now, talking about this, which is falling gas prices, means some utility customers could see a lower summer bills. I mean, this is 100% good, but you need to understand that if it gets too lowered, this will just benefit the companies which are the middle companies. It's not going to support the big companies which are, you know, supplying natural gas, and it is not going to actually benefit any of the customers, because at the end of the day they are only going to be getting a slice of the pie, but the middle companies who are providing it to the customers are going to be the one making the most. That's all I'm going to say. Energy up as oil, natural gas continue a rebound. Now, this rebound, which I just talked about 8 hours ago, that was when a lot of whales decided to jump in. We're getting so close to the 1st of April. Could this be the reversal that everyone has been waiting for? That would be something we would have to wait and see. Natural gas futures rose, pairing losers on the week to around 10% and closing well above the psychologically significant $2 per million British thermal units level. I mean, that's good to see that we did actually close a lot higher than that for the weekend. Natural gas price was a big loser among the commodities in the quarter. Gold and steel bucked the trend. I mean, gold, steel, silver, they are all pretty high for this quarter, but when it comes to natural gas and other commodities, they have been down significantly. And if natural gas is not one of the highest ones, I would be personally very surprised. And finally, natural gas features room for further consolidation near term. Natural gas could still retest the sub of $2 area. Just because we were able to see the slight jump, I don't think this is the reversal that everyone's been waiting for. I personally think, yes, this is going to start a new trend, but we might actually go down just to test out the $2 mark just one time before we are able to see another rebound. Other than that, I hope you guys did enjoy today's video. If you did, drop a like on it. If you're new to the channel, you do want to stay up to date with everything to do with natural gas, scroll down, tap the red subscribe button. If you have anything that you want me to cover in my videos, let me know down in the comment section. Have a wonderful day ahead, and I'll see you guys very soon. I'm out. Peace.